Good morning, it's Harvey Jackson. Just going to go through the StatsCan trade estimates. I know they come out quite late. They only showed up yesterday, but we'll go through it just a little bit here. The one that I'm paying attention to is going to be your wheats and your canola, and if we can. This is the line for the canola, and then you got your all wheat. I'm going to say there's not a whole lot of expectations to change. There's already been, of course, acre changes that we've already seen. Now it's about the production, right? So from this estimate from the NVDI in July, we'll get another NVDI report later on in September as well, and then some production numbers. So here, left field just had this in their article, and what it's showing is the August versus September versus December final, and you can see that there's 4 of the last 5 years, the August numbers were the highest on the production estimates, and then scaled down after that. You can see, the highest on these 4 years over the September, and then changed. But we'll see how that all plays out in a little bit here. The China imports. This is the last time we've had a trade dispute. Is back in this area here, and they can definitely find other sources and just not take product. So we can't expect them to come back to the table and take this kind of canola imports with 4 to 5 million metric tons expectations. So that is definitely absent from the market. It's going to be a trade shift. Who's going to buy it, right? So here's the S&D that left field's put out as well. Their number is at 42. I think that's going to be quite high, but you got to remember they're estimating for the whole year, not just guess what the U.S. or the StatsCan report is going to give us, right? So anyway, they're looking push up, carry out, pushed up crush, and decreased your export just because of the Chinese numbers kind of thing. Wheat extends fall on renewed signs of ample global supply. So you got a few of these complexes on the wheat side that had fallen down pretty hard yesterday, and it still continues. Just have a quick look at the weather. This could be a problem. This area that we've got circled here, as it stays dry, but it's also cool. Cool might be okay when it's dry, but at the same time, you want to finish off those plants and growing. But the absence of moisture is probably going to make these big crops smaller again, like I've been saying in the past. This trend seems to be continuing, where the U.S. Bulk of the growing area is going to stay cool. There's even some frost warnings in their weather by the lakes. You can see the active weather. Moisture is staying out of this area here. Here I'm just comparing the temperature anomalies for the 0 to 5. It looks like it's going to stay hot. It's still going to stay quite warm in the 5 to 10, and then it goes back to basically just normal on this weather model. But you can see that there's on the precipitation, looks like we're good for the 14 days possibly. Have a look at the canola. It's down 3 to 4, same as the rapeseed. Soybean oil is down slightly as well. Crude oil down a little wee bit, and soybeans just down 2/3 or 3/4 of a cent. And your wheats are all down a penny or two. So if we have a look at canola, we continue this slide here for the last 4 days now, going on to the 5. We're just the pressure and getting back into the middle of this wedge. This 200-day moving average seems to be resistance until we get today. We'll see how today actually trades. European rapeseed trading below the moving averages. Still green, but it's still trading below it. $112 price differential between the European rapeseed and Canadian canola. Is that enough to encourage more trade? It's hard to say. Usually it takes a bit more than that to be able to pull some of that product from Canada to go to Europe. They will still need product for their renewable programs over there as well. Soybean oil futures, we're getting towards the very close to our trend line. So is it going to break that line? Veg oil futures, so the rapeseed oil versus soybean oil versus palm oil. You can see the rapeseed oil is slightly more expensive. You can see that it had been a lot more expensive in the past, but a lot of them are getting closer in values. Here's your soybean futures. It looks like it's getting supported by this short-term moving average here for sure, but is it going to hold? And if it doesn't, it'll probably break down. Your crude palm oil supported with some of the stories that they're going to try to meet the deforestation programs there. Crude oil falling apart a little, or holding up a little bit, I should say, but on the lower end of the range. Canadian dollar is actually looking like it's going to continue to surge here. It's beating some of the short-term moving averages, get into this medium-term moving average as well. It would have to test the 73 cents, 73 and a quarter, and then it could be back up into this range again. Live cattle just still continues to keep on rocketing. Same with feeder cattle. Just that screwworm scenario just continues to stay in the news. I don't think any Mexican beef is going to make it into the U.S., and it just keeps on keeping support under this market. The only problem is when is the demand going to wane? I don't know. That's anybody's guess there. You see our terrible day that we had on in the spring wheat complex. It red deep candle, and it shows even in the Kansas it broke the trend there as well. Although we can see that candle on the Chicago pushed down as well, but it hasn't made new lows yet. Just like the corn has still got some support here as well. And that's all I have for you today.